We're jumping straight into energy fuels today. Everyone is watching the price action, but the real story is the strategic shift into rare earths and that massive earnings beat. I mean, you just look at this chart. We are talking about a stock that is up, what, approximately 180% year to date?
Just this year.
Right here in early 2026. It is hitting 12-year highs. And this thing, it's behaving more like some tech high flyer than a boring mining stock.
It really is.
But here's the kicker. It's not just hype. They absolutely crushed their 2025 production targets.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
Glad you're here.
And it really is rare to see a materials company capture the imagination of the market like this. But I guess when you sit at the intersection of energy independence and tech hardware, things get interesting fast.
They really do. And before we rip into the numbers, and believe me, the numbers are wild, do me a favor. If you want to stay ahead of the curve, get these breakdowns delivered right to you, just hit that subscribe button and smash the like. It helps us keep the lights on and, well, it keeps you in the know. There you go. Now let's get into it.
So help us frame this. I mean, usually when people hear mining stock, they think, cyclical, slow-moving giants
Or risky penny stocks, yeah.
Right, exactly. But energy fuels is pitching itself as something entirely different here in 2026. What's the setup?
So the setup is that we are looking at a company sitting pretty comfortably at the intersection of the nuclear renaissance and the critical mineral supply chain.
Okay.
It's a dual narrative. You have to understand both sides to really get the valuation. On one hand, you've got the uranium story.
Right, the one everyone knows.
Yeah, everyone knows that's heating up because of AI power.
Yeah.
Demand data centers need that baseload power. And nuclear is, well, it's the answer. That is the energy in energy fuels.
Right, that's the part of the story most people are familiar with.
But on the other hand, and this is where the explosive potential lies, you have the rare earth element angle.
Okay.
They are positioning themselves not just as a miner that digs dirt, but as a specialty chemical processor. But let's start with the immediate catalyst. Why is all this money flowing in right now?
Why the vertical chart?
Exactly. Why is the chart vertical?
It just feels like pure financial velocity. The growth numbers we saw recently were, frankly, staggering.
Staggering is the right word. We got the Q3 2025 numbers, and revenue was up 337% year over year.
Wow.
They pulled in $17.7 million in that quarter alone.
Just in Q3.
And if you zoom out to the full year of 2025, revenue hit nearly $79 million. That's up over 103% compared to the prior year.
Okay.
When you see triple-digit growth like that, you start to understand why the chart looks like a hockey stick.
Okay, hold on. I have to play the skeptic here for a second, because I've seen this movie before with commodity stocks.
Go for it.
300% growth sounds amazing, but are we just looking at a low base effect? Or did uranium prices just, double?
A fair question.
Because if this is just a commodity price spike, that's not really company execution, right? That's just luck.
That is the crucial question. And the answer is, it's both, but the execution was the real driver here.
Yeah.
This wasn't just them sitting on inventory while the spot price went to the moon.
Okay.
It's absolutely volume. And that's what makes this a quality beat in the eyes of Wall Street.
So they actually moved more rock.
They exceeded their guidance for uranium production, for mined ore, and for concentrate sales. They aren't just riding a commodity wave. They are digging more stuff out of the ground and processing it faster than they said they would.
And in the mining game, doing what you said you would do that's actually a rare skill.
It is. That's operational excellence.
And that leads us to the moat, right? Because in this business, anyone can stake a claim and say they are going to mine uranium. I could go stake a claim in Utah tomorrow if I wanted to.
You could, but good luck doing anything with it. You'd be stuck in court for 10 years.
Exactly. Actually getting it out of the ground and, more importantly, processing it into something usable, that is the real bottleneck.
Right, and this is where Energy Fuels drops the hammer. The White Mesa Mill.
Okay.
If you take nothing else away from this conversation, remember that name, the White Mesa Mill. It is the only operational conventional uranium mill in the United States.
The only one.
The only one.
Let's just pause on that.
The
only one. We're in the United States, we have the largest nuclear reactor fleet in the world.
Yeah.
And we only have one place to process conventional ore.
It's crazy, right? But that is the reality of 50 years of, neglected infrastructure and very, very tough permitting environments.
Wow.
And that is why this asset is the crown jewel. While other companies are trying to get permits, which involves lawsuits, EPA reviews, community hearings, Endless red tape Energy Fuels is already running one.
So they effectively have a time monopoly.
100%.
Yeah.
You cannot buy time. Even if a competitor raised $1 billion tomorrow, they couldn't replicate the White Mesa mill before 2030. Maybe later.
So they're vertically integrated.
Completely.
Mm-hmm.
They don't just dig the rock up. They can process it right there. That saves margin, that saves time, and it makes them a strategic asset for the entire country, not just a company.
And that strategic value is what brings us to the pivot you mentioned in the open, the rare earths.
Mm-hmm.
This is what I think has the market really, really excited because uranium is great, but rare earths are the building blocks of the, future economy.
This is the hidden catalyst. They are calling it the Phase 2 expansion at White Mesa. Now, stick with me here because this gets a little technical, but it's why the stock is at 12-year highs.
Okay, break it down for us. What exactly are they doing?
So they're retrofitting and expanding the mill to process rare earth elements, specifically neodymium-praseodymium, or NdPr.
NdPr, it sounds like a droid from a sci-fi movie.
It does, but it's actually the secret sauce for high-performance permanent magnets. You need NdPr for the motors in electric vehicles. You need it for wind turbines. You need it for the guidance systems in defense tech, like missiles and drones.
So critical stuff.
Critical. Without this stuff, the green transition and modern defense systems just don't happen.
And currently, who makes all of that?
China. China absolutely dominates this space, specifically on the cost and the separation technology. They have a stranglehold on it.
Right.
But here is the Energy Fuels pitch. They are projecting they can produce this stuff domestically at a cost of around $29.39 per kilogram.
And for context, that is incredibly competitive globally. Usually, Western companies try to compete with China and realize their costs are double, maybe triple.
Of course.
Because of labor and environmental regulations. If Energy Fuels can actually produce at $29, they aren't just a mining company anymore.
No.
They're a critical infrastructure play.
Exactly. And they are putting big money behind it. It's a $410 million investment for this Phase 2 expansion.
That's a big number.
It's a huge number. But the EBITDA upside, the potential earnings, is significant. They're betting the farm on this, but it's a calculated bet.
Why can they do it when others fail? I mean, we've seen other rare earth companies in the West just crash and burn.
It goes back to the mill. The specific type of ore that has rare earths, it's called monazite sand, is often slightly radioactive because it contains thorium and uranium.
Ah, okay.
So most rare earth startups can't touch it because they don't have the licenses to handle radioactive materials.
But Energy Fuels.
Energy Fuels is a uranium miller.
Yeah.
They love radioactive waste. They are already licensed for it.
Yeah.
So they can take the stuff nobody else can touch, extract the uranium for nuclear fuel, and then process the rare earths.
It's a perfect synergy.
Perfect.
And that connects perfectly to the macro tailwinds. We know the Department of Energy is pushing hard with that $2.7 billion initiative for U.S. enrichment in critical minerals?
Mm-hmm.
This isn't just a company acting in a vacuum. This is a policy-backed play.
The government wants domestic supply.
Mm-hmm.
And Energy Fuels is raising its hand saying, hey, we have the mill and we have the license.
But let's talk about how they pay for it. $400 million is a lot of cash.
It is.
Usually, when a miner announces a massive CapEx project, the stock tanks because investors know dilution is coming. They issue millions of new shares to pay for it.
And that is the other part of the bull case that we have to highlight. The balance sheet is a fortress. Zero long-term debt.
None.
None. In the mining world, that is unheard of.
Mm-hmm.
Usually these guys are swimming in debt to pay for massive yellow trucks and crushers.
And they have liquidity too, right? They have cash on hand.
About $300 million in working capital and liquidity.
Wow.
And this matters because they can self-fund a huge chunk of this or handle the upgrades without destroying shareholder value. They aren't going to the bank with their hat in hand.
And that's why the stock is holding its gains. It's a compelling story. It really is. You have the monopoly asset, the triple-digit growth, the government tailwinds, and the cash to execute. But
There's always a but.
and there is always a but on the Easy Money Show. We have to look at the flip side. Okay, let's look at the flip side regarding the actual profits. Because revenue is vanity, profit is sanity.
Oh, absolutely. And this is where the picture gets a little messier. If you look at the bottom line,
Yeah.
despite that massive revenue jump, the company is still losing money.
And not just a little bit of money. Let's break that down.
Okay, so trailing 12 months, their net income is negative $97.77 million.
They lost almost $100 million.
$100 million. And their Earnings per share, or EPS, is negative 46 cents.
Yeah.
So for all the hype, for all the revenue growth, they are burning cash to make this happen.
And that is crucial for the listener to understand. The stock is up 180%, but they aren't actually profitable yet.
Not yet.
You are paying for future promise. You're paying for the idea that the rare earth expansion will work and that uranium prices will stay high.
It's all forward-looking.
The valuation right now is not based on current cash flow. It's based on a dream of what 2027 or 2028 looks like.
Right. And that brings us to the execution risk. We talked about that $410 million capex for phase 2.
Mm-hmm.
Rare earth chemistry is notoriously difficult. It's not like crushing rock for gold where gravity does the work.
Yeah.
It is complex chemical engineering, solvent extraction, managing pH levels, separating elements that are chemically almost identical. It's really hard to get right at scale.
Mining history is littered with projects that went over budget and over time.
Littered with them.
Just look at what happened with other rare earth projects in the West, years of delays. If they run into technical hurdles at White Mesa, or if construction gets delayed, that $400 million could turn into $600 million.
And that timeline pushes to the right.
And the market hates delays.
And we can't forget the commodity volatility. Their entire business model depends on uranium and rare earth prices staying high.
Right.
If the global economy slows down, or if this whole nuclear renaissance hits a speed pump, demand softens.
And if the price of NdPr drops?
Those margins they were projecting, that $29 cost versus the selling price, they just start to disappear.
It's a classic cyclical risk. You are riding the wave, but waves crash.
They do.
There is also something happening internally that we need to point out. You mentioned the stock is at 12-year highs.
Yep.
What are the people inside the building doing?
They are selling. Now, not all of them, but we saw insiders sell 463,000 shares in the last 3 months.
And that's worth what?
Nearly $7 million.
Now, to be fair, people sell for all kinds of reasons. Taxes, buying a house, diversification. We always say insiders sell for a dozen reasons, but they only buy for one.
True. But when insiders are selling $7 million worth of stock right into a massive rally, it's a signal.
It's something to watch.
It's not a panic signal, because institutional ownership is still high. Over 48% of the shares are held by big funds. But it tells you that the people who know the company best are happy to take some chips off the table at these prices.
Yeah.
It's something for the listener to keep in mind. The easy money might have been made by the guys who bought a year ago.
So we have a company with incredible momentum, but clear execution risks and profitability gaps. For the person watching this today wondering, do I get in or do I stay out? What should they be looking at in the immediate future?
We have some major catalysts coming up. The big one is earnings. The next report is expected on February 25, 2026.
That is just around the corner.
Literally days away. You need to watch that report like a hawk. Don't just look at the top-line revenue.
Look deeper.
Look for updates on the uranium production ramp-up. Are they still beating targets? And more importantly, look for news on the rare earth circuit construction. Is it on schedule? Is it on budget?
Because any slip up there could punish the stock.
Absolutely. Yeah. And beyond the hard numbers, there's a lot of smoke around this company right now regarding deals.
A lot of chatter.
Tons of smoke. There was an M&A call transcript from January 21 that dropped some serious hints. There are rumors of potential deals, maybe expanding their pipeline even further.
And we should mention vanadium, or the integration of feed from Madagascar.
Yes, that Madagascar feed is key for the rare earth strategy. They have a project there called Toliara.
Right.
If they announce they have secured that supply chain completely, that de-risks the whole rare earth project because it guarantees the raw material they need for the mill. You can't process what you don't have.
So watch for press releases on that and macro.
Always watch the government. Any new announcement from the U.S. government regarding domestic supply chain support, specifically regarding the nuclear revival, acts like rocket fuel for this stock.
Oh, yeah.
If the Department of Energy announces another grant or a new policy favoring U.S. mills, Energy Fuels is the primary beneficiary.
So it's a play on policy as much as it is on geology.
100%. You are betting that the U.S. government will not allow the nuclear supply chain to fail.
All right, let's bring this home. We have covered the massive surge, the monopoly mill, the losses, and the insider selling. If you had to sum this up for someone standing in an elevator, what is the lowdown?
Here's the lowdown. Energy Fuels is a debt-free player with a monopoly on U.S. conventional uranium milling. They crushed their 2025 guidance, and they are leveraging that success to pivot into high-tech rare earths. But
But
they are priced for perfection at 12-year highs.
it feels like a pivotal moment.
It is, and here's the thought I want to leave you with. With the stock acting like a tech stock up 180% and insiders taking some chips off the table, you have to ask yourself,
What's that?
are you buying a mining company or are you buying a geopolitical hedge on the U.S. supply chain?
That is a very different investment thesis.
It is. Because if you are buying a miner, the fundamentals are stretched. You're paying a high price for a company losing money. But if you are buying a piece of American energy independence, if you believe the U.S. must break China's grip on rare earths, then this might just be the first inning. Just remember, the easy money, that initial 180% run might have been made. The next leg up requires perfect execution on that rare earth expansion.
That is the million-dollar question. Is it a trade or is it a thesis?
Exactly.
Well, that wraps up our look at energy fuels. We hope that helps you cut through the noise.
Thanks for listening to the Easy Money Show. We'll see you on the next one.